Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Muhammad Azim from Traders United. Press disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the today's session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the unemployment rate in Europe, and I'm going to focus on euro dollar currency pair. The second one is the CPI month over month related to Switzerland, and I'm going to discuss the US dollar Swiss franc currency pair. So let's start with the first one. Unemployment rate in Europe. So what is unemployment rate in Europe? The unemployment rate measures the percentage of people in the labor force who are actively looking for work but cannot find a job. It is an important financial indicator, also known as an important economic indicator, because rising unemployment can reflect slower business activity and weaker consumer spending. A lower unemployment rate usually supports the euro because it shows stronger economic conditions. A higher unemployment rate can weaken the euro because it raises concerns about slower growth. Now, let me discuss about financial news event details. The unemployment rate in Europe we got on April 1st at 9 a.m. UTC time. The previous number was 6.1%. Forecast was also 6.1%, and the actual number we got is 6.2%. The official release showed unemployment rate at 6.2% in Europe. This was slightly above both forecast and previous readings. It showed a small weakening in labor market conditions. Now, let me discuss about market context and financial news release outcome. Normally, higher unemployment is negative for euro, but after this release, euro USD moved up. Let me show you the price chart of euro dollar currency pair. So right over here, this is the daily time frame of euro dollar currency pair. So over here, right over here at 1st April, the price action of euro USD actually moved up on this trading day. So after the release, Euro USD moved up. This means Forex traders focused on other market factors beyond the data. The result was only slightly above forecast, so negative impact remained limited. The market reaction that we got in euro dollar, let's discuss that. So after the news announcement, euro USD moved higher. The rise suggested that selling pressure on the euro was weak. Forex traders may have already priced in softer labor data before the news release. The currency market also showed stronger euro demand during that session. Now, the key drivers behind the move: the actual unemployment rate came at 6.2%, so we only got a small increase. The forecast was 6.1, the actual number we got is 6.2, so just a small increase. The market reaction stayed positive for euro. Broader sentiment supported euro buying, and due to this reason, euro USD moved up despite the weaker financial news data. Now, let me discuss about technical and sentiment considerations. The euro USD showed upward movement after the release. Short-term sentiment favored euro strength. Price action suggested buyers remain active. Here's the 4-hour chart of euro USD currency pair. So further movement in price action depends on US dollar direction and overall market sentiment. Next, let us discuss about trading outlook post-release perspective, I would say. So the short-term bias turned bullish first, and then it turned bearish. Price action rallied up, and then we got the drop in the market of euro dollar currency pair. The overall analysis and key takeaway is the Europe's unemployment rate rose to 6.2%. This was slightly above forecast. Normally, this would pressure the euro, but euro USD moved higher because forex market sentiment favored euro buying. The final key takeaway is the previous number was 6.1%, forecast was 6.1%, and the actual number we got is 6.2%, which is higher, so we would safely say the higher unemployment usually weakens the euro, but this time euro USD moved up because broader forex market sentiment supported the pair. Next one is the CPI month over month related to Switzerland, and we're going to discuss the US dollar Swiss franc currency pair. So, what is CPI? Well, CPI month over month measures the monthly change in prices of goods and services in Switzerland. It is a key inflation indicator closely watched by the Swiss National Bank. Higher CPI usually strengthens the Swiss franc and pushes the US dollar Swiss franc lower. Lower CPI suggests softer inflation, which can weaken the CHF and push the USD Swiss franc higher. Now, let me discuss about financial news event details. So, CPI month over month in Switzerland that was released on April 2nd at 6:30 a.m. UTC time. The previous number was 0.6%, forecast 0.5%. The actual number we got is 0.2%. So the pair in focus is the US dollar Swiss franc currency pair. Okay. So the actual reading came at 0.2%, well below both forecasts and previous numbers. This showed inflation cooled more than expected in Switzerland. The market context and release outcome, let's discuss that. The price action of US dollar Swiss franc currency pair, let me show you first. This is the weekly, is the daily. So on April 2nd, the USD Swiss franc currency pair after the news announcement actually moved up over here. Okay. So USD Swiss franc moved up after the release. The weaker CPI reduced demand for Swiss franc. Forex traders reacted quickly, selling CHF and buying US dollar. This created upward pressure on USD-CHF currency pair. If you take a look at a price chart of 4 hour, you can see we got this nice trend over here. I will discuss this later. The market reaction analysis, well, the lower than expected CPI suggested the Swiss National Bank may delay tightening. This reduced short-term support for the CHF. So USD Swiss franc rose as forex traders adjusted positions. The move reflected weaker Swiss inflation and stronger US dollar demand. The key drivers behind the move. The CPI came below forecast at 0.2%. Inflation slowed sharply from 0.6%, reduced chances of near-term Swiss rate hikes. Short-term Swiss franc selling boosted the US dollar Swiss franc, and forex market focus shifted to US dollar strength and global risk sentiment. Now let me discuss technical and sentiment considerations. Well, the US dollar Swiss franc showed bullish movement after the release. Short-term sentiment favored US dollar strength. Global risk appetite and technical levels supported the upside. Now, let me discuss the trading outlook post release. Well, the bias turned bullish for US dollar Swiss franc. That's what I see. And instead of getting a deeper pullback, market just simply rallied up further inside US dollar CHF currency pair. So the bias turned bullish for USD Swiss franc. Short-term upside remains strong. Further gains may continue if Swiss inflation stays soft. So watch out for pullbacks if traders take profits after the initial bullish leg. So over here we got the top and then market drop. This is where again we got these pullbacks over here multiple times. So even if we do get a one more push to the upside, market is probably going to create a short-term pullback again. So the bias is basically, bullish in USD Swiss franc. Now, overall analysis and key takeaway is the Switzerland's CPI month over month slowed to 0.2%, below both forecast and previous 0.6% number. This softer inflation reduced the support for CHF. USD Swiss franc moved higher as forex traders reacted to the weaker financial data. The final key takeaway is the previous number was 0.6%, forecast was 0.5%. The actual number we got is 0.2%. So the softer inflation weakened the Swiss franc and pushed the USD Swiss franc higher. Now, let us take a look at previous week global market trends, and I'm going to discuss the Euro USD currency pair, and I'm also going to discuss one more, the US dollar Swiss franc currency pair. So let me go over to some price charts and see what's going on. The first one is the Euro versus United States dollar currency pair. Now, if you take a look at the weekly time frame over here, the way I see Euro dollar currency pair, uh, it managed to break below the support level. And if we draw a simple trend line, you can also see a nice bullish breakout over here as well in Euro dollar currency pair. So we take a look at this stuff over here. You see, so this is a clear break of this bullish trend line right over here. So the way I see in daily time frame of Euro USD currency pair, the trend looks kind of bearish over here. Okay, it's quite possible that we might get a false bullish breakout over here in Euro USD currency pair, and price action might show us kind of a pullback, and then market prints a new low after that inside Euro USD currency pair. Next, let us talk about the US dollar Swiss franc. The USD Swiss franc, the way I see market is trying to rise up over here. Okay, so if I zoom in a little bit, you can notice that this is where we got the bullish breakout. So we might get a pullback in the market in US dollar Swiss franc currency pair before price action goes up even further. Let me change the color to magenta. So this was a nice bullish breakout over here, and then a rally, and then market tries to drop over here. So we might get a retest of this trend line. This one looks also possible. Okay, something like that. Regarding the daily time frame, this looks like to me a nice uptrend going on. So we might get a drop in market, and then market is going to rise up after that. Okay, keep sending in your questions. Give I will provide some time at the end of the today's session. I will try to answer all of your questions. Okay, next let's go back to our presentation. Now I'm going to talk about current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. So let's discuss the current week. Okay. So first one is the Germany factory orders month over month related to Europe, and we will get this financial news event on April 8th at 6 a.m. UTC time. Next one is the unemployment rate in Canada, and we're going to discuss the USDCAD currency pair. And we will get this financial data report on April 10th at 12:30 p.m. UTC time. So these are the basically upcoming important financial news events. Uh, so let's go into some of the details. Okay. The first one is the Germany the first one is the German flash. The first one is the German factory orders. Now, what is German factory orders month over month in Europe? Well, the German factory orders month over month. M over M stands for month over month. It's just a short name, an abbreviation. So German factory orders month over month measures the monthly change in new orders placed in German manufacturers. It is a key financial indicator for industrial activity. Factory orders signal future production, business confidence, and export demand in Germany. Germany is the largest economy in Europe. A stronger than expected reading usually supports the euro. It suggests rising industrial demand and stronger economic momentum. This can push euro USD higher. A weaker result may indicate slower manufacturing, weaker exports, and lower growth confidence. This can put downward pressure on the euro. Now, let's discuss about the event details. The German factory orders month over month in Europe. Well, the previous reading we got was minus 11.1%. The forecast is 3.0%. And the actual data not yet released, but it is going to be released on April 8th at 6 a.m. UTC time. Okay. So the forecast of 3.0% signals expectations of a rebound in industrial activity. Forex traders will watch whether actual orders confirm the rebound or surprise the currency market. A stronger than expected result may boost the euro. A weaker than expected result could weigh on the euro and euro dollar currency pair. So, Forex market participants also monitor global risk sentiment and US dollar performance. Now, why Euro USD is going to move after this important financial news event? Well, the key drivers for the price action includes actual orders versus forecast and previous reading, implications for ECB policy and European growth, short-term euro momentum, market positioning ahead of this financial release. So even small deviations can trigger sharp moves in price action of euro dollar currency pair. Forex traders should aware of that one. So factory orders are a leading gauge of economic strength. Now let me discuss Forex technical and sentiment considerations. Euro USD may see increased volatility around the actual financial news release time, which is 6 a.m. UTC. It's also written right over here as well. So forex traders often combine economic expectations with technical levels to plan their currency trades. Global risk sentiment and US dollar direction will influence the move's strength and sustainability. Now, let me show you a chart of Euro USD currency pair. Actually, go back over here. So here's the daily time frame, and the way I see euro dollar is about to break this bearish trend line over here. So we might get a bullish rise in euro USD. As far as the forex trading outlook, also known as pre-release, is concerned, well, as far as my bias, well, I'm neutral. Okay, so my bias is kind of a neutral, or if we do get a bullish breakout over here, then it would obviously turn bullish, at least on a short term basis. The upside potential is there if orders beat expectations and we get a strong euro. The downside potential is there if orders disappoint, weak euro. Okay, that's what you're going to get it. If orders are going to disappoint, you will get a weak euro. So expect short-term volatility during the news release time. Watch the market reaction carefully for initial moves and potential retracements. Overall analysis and key takeaway is Germany's factory orders month over month is expected to rebound to 3% from minus 11.1%. This release is important for euro sentiment and short term euro dollar movement. Forex traders should monitor the financial news data closely and adjust positions based on the surprise factor. The final key takeaway is the previous reading minus 11.1% and the forecast is 3.1%. The actual data is pending, it's going to be released. So stronger than expected orders may support the euro dollar currency pair. Weaker than expected orders may put the euro under pressure. Next one is the unemployment rate in Canada. So what is unemployment rate in Canada? The unemployment rate measures the percentage of people in the labor force who are actively seeking work but cannot find a job. It is a key economic indicator. Rising unemployment may reflect slower business activity and weaker consumer spending. A lower than expected rate usually supports the Canadian dollar. It signals stronger labor market conditions and economic momentum. A higher than expected rate may weaken the Canadian dollar. It raises concerns about slower economic growth. So USDCAD may move up or down depending on how the financial data compares with the expectations. Now, the financial news event details. The previous number was 6.7%, forecast 6.8%, and the actual data is going to be released. Now, the date and time is April 10th, 12:30 p.m. UTC time. Okay, now let's discuss the market context and pre-release expectations. The previous reading of 6.7% showed moderate labor market strength. The forecast of 6.8% signals a slight expected rise in unemployment. Forex traders will watch whether actual data surprise the forex market or not. A lower than expected reading could boost the Canadian dollar. A higher than expected reading could weigh on the CAD and push the USD CAD higher. Global risk sentiment and US dollar strength may influence the price reaction. Now, if we go over to a price chart of USD CAD currency pair, you can see we got this nice top over here, and as of today, you can see we got a breakout as well. Now, why USD CAD is going to move after this news release? Well, there are key factors for price action to include actual unemployment rate versus forecast and previous reading. implications for Bank of Canada policy decisions, short-term US dollar and Canadian dollar momentum, forex market positioning ahead of the news release. Even small surprises can cause sharp moves. The unemployment rate is closely watched by forex traders and economists. Now, let me discuss technical and sentiment considerations. USDCAD may show increased volatility around the news release time. Okay, so currency traders often combine economic expectations with technical levels. Now, I just showed you that we got this bullish breakout, but this is the weekly time frame. Go over to the daily. The daily time frame kind of looks a bit bullish over here. Okay, this is the daily chart. So USD-CAD may show increased volatility around the news release time. Market sentiment and US dollar strength will influence the direction. As far as the trading outlook pre-release is concerned, my bias is somewhat neutral before the release. The upside potential for USD CAD is there if unemployment is higher than expected. We will get a weaker Canadian dollar. The downside potential is there if unemployment comes lower than forecast, and this means stronger Canadian dollar. Short-term volatility is expected to increase during the news release time. Watch initial moves and important, I would say, potential retracements. Overall analysis and key takeaway is Canada's unemployment rate is, the forecast is 6.8%, which is slightly above the previous 6.7% number. This economic release is important for Canadian dollar sentiment and short-term USD CAD movement. Currency traders should monitor the data closely and respond to any surprise. The final key takeaway is the previous number we got is 6.7%, forecast is 6.8%. The actual data is going to be released on April 10th at 12:30 p.m. UTC time. In summary, lower than expected unemployment may strengthen the CAD and push the USD CAD lower. Higher than expected unemployment rate may weaken the CAD and push the USD CAD higher. Now, let us take a look at current week global forex market trends. So, first one is the euro. Let's go to a price chart of euro dollar currency pair. This is the weekly time of frame of euro USD currency pair. The way I see market is probably going to move sideways, and then it's probably going to rise up, create a short-term pullback, and then drop more, because we have already seen a break of this trend line right over here. If we go over to a daily time frame, price action tested uh, this trend line. It's almost there to test it actually, and we might see a bullish breakout to the upside. The 4 hour kind of looks to me a sideways. It's moving in a trading range type scenario. We can draw a simple horizontal trend lines over here. So this is the lower trend line, and then this is the upper trend line. So this is kind of a trading range going on in 4 hour time frame. Next one is the US dollar versus Canadian dollar currency pair. Okay. USD CAD versus USD CAD pair. Okay. This is the daily time frame looks somewhat bullish over here. As far as the 4 hour is concerned, this one also looks a little bit bullish over here. You can draw a simple trend line, and it's quite possible that USD CAD is going to drop first to test this trend line and maybe find some buyers at the dip over here, and then market tries to rise back up. Okay, The trend is up in 4 hour, but market never moves in a straight line. You always get some kind of a pullback in price action, which provides you an opportunity, a chance to make money. Next, let us take a look at US dollar Swiss franc currency pair. So USD CHF currency pair. This is the daily time frame. Looks bullish over here, and the way I see market is probably going to drop over here. And the reason is this: we have this resistance level right over here. So here's the arrow. So we got a test and a spike in market. So it's quite possible that price action is going to drop on a short-term basis inside US dollar Swiss franc currency pair. If we go to a 4 hour time frame, it looks somewhat bullish. So it's quite possible that market keep going up, or the way I see, if market is going to break this trend channel, that would be a potential short sell opportunity over here. Next one is the XAUUSD pair spot gold. Spot gold weekly time frame. We got a nice up run in prices. The gold printed at top at 5606, and then we got kind of a drop in market. I consider this as a sideways price action over here in spot gold, and it's quite possible that gold is going to show us some sort of a, I would say, a bullish rally first, and then resume the downtrend. So on a short-term basis, I expect bullish price action in gold. If we go to a 4 hour time frame, this is where we got the breakout. So this was the short-term resistance level. In other words, most recent swing high in price action. Okay. So due to this reason, we might get a sideways price action, or the way I see it, it might go up uh, just to create a short-term pullback. Okay. The overall trend, I would say, is kind of bearish inside spot gold, at least for the time being. Okay. I will take a few minutes now for questions and comments. If you have any questions or comments related to today's Forex trading webinar, feel free to type them inside the chat box. I will be happy to answer your questions. So let me take a look at how about the US dollar strength for coming weeks. As far as the euro dollar is concerned, the long-term picture obviously suggests that euro dollar currency pair has printed at top. So the DX, the US dollar index, is most likely uh, going to become strong, I would say. On a short-term basis, we might get a bullish leg in euro, but overall, euro dollar is most likely going to drop over here. And it's not just the euro USD. If we take a look at Australian dollar, AUD USD currency pair, this is not the today's topic, but let me just discuss it over here. This is where we got a trend line break over here. This was a bullish trend line. and then AUD-USD currency pair managed to break through it. So we might get a bullish rise in AUD-USD currency pair on a short-term basis, and then it's probably going to drop further. So same story in Euro USD currency pair. So on a short-term basis, we might see a bullish price action in Euro USD, a weakness in US dollar index, but on a long-term basis, in coming trading weeks, I would say the United States dollar is going to become strong. Okay, BTC, Bitcoin. Okay, well, can't discuss it right now. Regarding the any news for oil, let's see if I don't know if oil is listed over here. This brokerage firm would not give me a second. Let's see, WTI. Yes, this one is the W. No, it's something else, I think. Oil, I don't know. I don't have. This is the WTI, but that's something else. Let's see. I don't have oil over here. Only have forex pairs, so can't talk about the oil. But the way I see, the oil is actually bullish overall. Yeah, regarding the gold, I've already answered the gold. Can you please save it, sir? I wanna. Yes. Basically, my plan is to upload the recording of today's webinar on our YouTube channel. Okay. Okay. Let's go back to the PowerPoint presentation. So let us review what you have learned today. Well, we discussed about the German factory orders month on month in Europe, and we talked about the euro dollar currency pair. Next one was the unemployment rate in Canada. Next, I also discussed euro dollar, USD CAD, USD Swiss franc, and spot gold. These are the assets to watch out for profits. What you should do next: stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true, exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, April 14th, 2026 at the same time. So that's all from my side for now. Have a great day and goodbye.